All right. Good morning. Happy hump day. Welcome to the live stream. It's Fed Day. Fed days are always interesting. They can be very volatile or very choppy up into the Fed. So we'll see what we get today. There's a lot of times that we we see days that you would expect everything to be waiting on the Fed in the afternoon, but it doesn't, and you see a big move before the Fed and then a big move at the Fed and so on. So we only trade the morning session on any given day, so we'll be out long before the Fed announces whatever decision they're making. The announcement is irrelevant in my opinion. The market's going to do what the market was already going to do, and you can hear about that in A Decade of Trading Secrets. So you'll see on the screen there, I am writing a book that is going to be the cover. It should be out sometime this month, and I am going to give it away for free. Now, is there a catch? The answer to that is yes, there is a catch. There's always a catch. Nothing is free. Nothing is free. Everybody knows that. That's a good tagline. But it really is free in the sense that I'm not charging you for the book. It will be $9.99 for shipping because it is a hardback book and I do have to pay for shipping, so I can't eat thousands of dollars in losses in shipping. So I would ask just the $9.99 to cover the shipping of the book, or if you're international, it's going to be $19.99 because obviously you're shipping overseas. That's a little different. So it's two parts. The first part is going to be mindset training, and not necessarily training, but kind of everything that I learned about how the market is programmed to program you as a trader. So everything the market does is systematic in the sense that it's a conditioning, Pavlov's dog kind of effect. It shows you the same things over and over and over again until you react predictably. And that's why 99% of day traders and swing traders and any kind of exchange traders instead of buy and hold are losers, because the market conditions them to react predictably in every environment. And when you're predictable, the market absolutely crushes you. So the first half of it is mindset and understanding the market at a much deeper level than just what a chart pattern looks like. It's understanding how liquidity sweeps manipulate you, and how failed breakouts manipulate you, and how your mind manipulates you, and how your ego manipulates you because of what the market gives you and how the market treats you as a trader. It treats you as a friend and then reaches in your pocket and takes your money. It's really quite devastating and annoying and frustrating. And when people say, hey, the market's rigged, they're not wrong. Their context is wrong. They think that the market is just out to get their $5 trade. And that's nowhere near the case. It is more that the market conditions you to be a trader that it can predictably beat. And that's why it's rigged. But if you understand that, and you know that the market is conditioning you, and you know what to look for, and then you can reverse that and be on the side of the market, then you are the casino. So that's how I kind of look at this: is the market is the casino and you are the gambler. Unless you learn how to play the game like the market, then you become the casino, and all the other traders become the gamblers, and you get to benefit off of the conditioned traders out there as well. So that's the first half of it. The second half is price action. But price action is useless without mindset, and mindset is useless without price action. They are the two most important things you can have as a trader. And it's 20 chapters of lessons about the market. The first 10 are mindset. The second 10 are price action. So that'll be out soon. I'll probably have a pre-order for it here soon as well, hopefully before the end of the year. I just wanted to go over that really quickly and do that. So welcome to the live stream, guys. We are going to be featuring IWJ Pivot Point Pro. The beauty of that indicator that we are featuring is I designed it based on how the market conditioned you. So I designed it to take away all of the, not all, nobody can take away all. That's an unfair statement. I designed it to take away most of the things that trap traders. And get you in as close to tops and bottoms as possible. Now, again, is that perfect? No. No trader, no indicator is perfect. No trader is perfect. No system is perfect. There is not perfection. If you're looking for that, go home, don't trade, shut down your computer, you'll be broke. If you are looking for an edge and an understanding and a uh, trading plan that consistently beats the market for incredible results, then you're in the right place. We trade consistently here. We trade what I would say is a very, very solid or excellent risk reward. I understand that I wrote it, so it's a little biased. However, um, that doesn't mean it's not true. It simply means that that's what it is. It has proven itself. So whether I say it or not doesn't matter. It has proven that um, it works. So I'm going to show you that here in just a second as I get my screen moving. Sometimes I get a little bit of a slow computer during these things because they do require so much data. When I have a trading platform up, I have a streaming platform up, I have a chat platform up, I have all kinds of different things going. So give me 1 second here as my computer catches up with me. And we will go through the success that I'm talking about. Every trade is chronicled. Every single trade is in 2 places, 3 places actually. So in my Discord, if you're in my rooms, if you pay to be a subscriber to what we do, every single trade is listed in there. Every one of them, winners, losers, indifferent, the good, the bad, the ugly, they're all listed. I also track them myself offline, and I also have a paid subscriber, Matt. He is a customer, and he tracks them himself, as I'm sure others do. But he wants to ensure that everything's on the up and up, and that all the numbers are real. So he copies them down every single time and trades them with us and does well. And he sends me an update every month. And here is the month of November. And for November, we had to go up and down on our contract size because when there was high volatility, premium gets really, really high. And you don't want to be paying when premium goes up over $3, you need to cut your sizing down because it's just too expensive. So that's why you'll see here 463 times 50 contracts for 23,000, and then 150 times 25 contracts for 3,000. He simplifies it at the end. Basically, 538 times 50 contracts for 26.9. Profit year to date is 83,750. We also had a $25,000 month in October. Now this is trading 50 contracts. You don't have to trade that many. You can trade 1 contract. You can trade 5 contracts. You can trade 50. You can trade 100. It really depends on what your bank account is, what your capital is, because that's what you're measuring it against. We started with a $100,000 account. You can start with 10,000, 25,000, whatever you have, $1 million. That is up to you and your financial situation. But we started with 100,000, trading 25 contracts at a time. And the reason for that is most of the time option contracts are going to be under or around $2, except for when you get those high volatility zones. And so that is, if it's at $2, which is high, that's pretty high anyway. $2 would be $5,000. That would be 5% of your capital you are risking on a single trade. On top of that, we have a stop. So you're never really truly risking all 5%. You're risking probably 1%, less than 1%, something like that. Most of the time, options contracts are around $1.20. So you're really, in that case, risking 2,400 or 2.4%. So that's where we started. And then we did so well with that we were able to move our contract size up to 50 contracts because of our profit. So off of a $100,000 account, our profit this year is $83,000. Last year it was $35,000. So overall on that $100,000 account in basically 2 years, as we're basically at the end of this year, we're up over $100,000. So 100% return in 2 years. There ain't many places I know that you can find that. And all you have to do is follow a simple set of rules. And guys, I'm giving you an incredible Black Friday deal right now. I realized that Black Friday was like 2 Fridays ago, but I really want people to succeed in trading, so I've extended the deal to the end of the year. I'm just going to call it a holiday deal, even though I still have it labeled as Black Friday. It's whatever. But it's just going to be a holiday deal. And I want you guys to experience this. The really cool part of it is you get a money back guarantee. So I'll show you that real quick before we get into the charts, and then we'll get into trading. You're going to see, before I get into that, let me just show you the chart. You're going to see some really cool lines on here, like a call resistance, 0 DTE, high volume level. All of this stuff is from a place called Mentor Q. Incredible, incredible information. The market trades very regularly off of these levels, especially during regular trading hours. It gives you a one-day min and a one-day max, which act as our borders. In other words, we would not expect price to exceed 689 today by very much, and we would not expect price to drop below 677 by very much. So a pretty wide range today because it is Fed day, but these act as basically your shoreline. They stop the tide. However, if you know how shorelines work, we can measure the tide and we build houses on the water. But when there's a hurricane, that water pushes up into the houses and causes damage. There are times that these levels don't hold, and that's, in times of extreme squeezes to the upside or extreme selling to the downside, they do break. But more often than not, you can really utilize those as a place to look for reversals. These high volume and call resistance and put resistance levels. Those are the highest levels of puts for the day. And we would expect the market to have trouble getting through those if it's going up or down into them. For the deal, let's show you that real quick. This is not it. Just kidding. Don't ignore. There we go. I didn't type in the whole thing. So what you're going to get, you can go through. It's going to explain it in detail on that page you just saw. But what you're going to get is you're going to get the indicator, which is normally $59 a month. You're going to get it for $39 a month. And this is new signups only, guys. You're going to get my Advanced Elliott Wave course. That's normally $147. You're going to get my Price Action Masterclass, which is normally $67. So the total value is $273. You're getting it for $39 a month, which is 85% off. So check that out. You get a 30-day money-back guarantee. I think you'll love it. It's, like I said, as I showed you with the results, been absolutely killing the market. And it's simple. You don't have 1,000 things to do. You have one indicator that conglomerates a whole bunch of indicators and views the market through that philosophy or trading style. And most indicators are like, the RSI looks for one thing. It looks for an RSI that's over whatever and under whatever. The MACD, same thing. Key level, whatever. It looks for a key level. Mine looks for everything, and mostly it's forward looking. So it's looking for high volume levels like these listed. Not these necessarily exactly, but these are just helpful. But it's looking for high volume trading levels that are likely to cause reversals, and key levels of support and resistance that coincide with that. And then on top of that, we're looking for reaction, setup, and other different things. There's about 170 plus things that it looks at one time and produces a clean buy or sell signal. Super simple, easy to use. There are a few rules that go with it. Number one, we never trade after hours. After hours has no volume, therefore is weak and hard to trade. Number two, we don't trade on trend days. I give you a training video on how to understand when a trend day is established, so you would know that. And number three, we have 3 strikes and you're out. So if that prevents choppy days. So if we have a day where the market's like yesterday was one of these days, we didn't get a bunch of signals, but the market forever just kind of moved sideways here and then kind of went up and then moved sideways. Both of these sells, ironically, were very small winners. But on choppy days, you might get, like over here, you can see in this after hour session, you get the buy, sell. So if you lose 3 times in a row, we're done for the day because the market hasn't made a decision, and we're not going to sit here and lose money until it does. And you may miss a move because of some of those rules, and that's okay. If you aren't missing moves, you're a bad trader, because there are just moves that happen unexpectedly. There are moves that happen after a trend is established. There are moves that happen that really don't make sense, and that's okay. You don't need to catch every move. You just need to make money. So if you're trying to catch every move, you're a losing trader. So that is the whole deal in a nutshell. Very quickly, let's look at the charts. So overall, we've been talking in my room. There's two ways to view this. The primary path, what I'm considering most likely, is that this is a wave 4. This is an A wave up. We would look for a B wave down towards 6,700. And then 7,025 to 7,100 next, just depending on how aggressive they want to be. But there's a huge call wall on the SPX at 7,000. For the bears, this can be an A and then a B, and we would look for a C wave down. If they break 6,700, that's the first red flag. And then breaking 66.25 tells us we're likely on our way into the 6,400s. And this is going to be a C wave down. And this would look like a 5-wave structure down, and currently it doesn't look like that to me. So I do think the bulls will buy any dip, especially if we get one today off the Fed, and I think that level's around 6,700. Same thing on the NASDAQ. You can view this as a wave 4 as the primary path. This would be an A and a B we'd be looking for towards 25,000, and then a C wave for wave 5 up to 26.5 to 26.7 for the next all-time high. If they do break down below 24,712 and then ultimately below this 24,480 level, we are likely looking at the 23.2 area next. So 23.7 to 23.2 on the downside. So those are your two paths for the main indexes. We're going to get settled here. We got about 6 minutes till the open. I'm going to go through the chat and answer any questions, and we will go from there. 1 second. Let me get my chart the way I like it, so I can see. So we do have some key levels from the overnight session. 683.90. This is the SPY. 683.90 is your pre-market high. Your pre-market low, 681.69. Breaking either of those can start to form a trend. That's how trend days are formed. So a trend day, real quickly, if they break, we'll just do it one example of down, since the market is moving down right now. If they come down and they continue and they break the pre-market low during regular trading hours, so the market is open, we break the pre-market low, then we backtest one of these moving averages. Any of them are fine. VWAP, the 8 EMA and the 21 EMA on the 5-minute chart. They backtest them, and then they come down and break this low right here. As soon as they break this low, this constitutes a trend day down. Does that mean they're going to go down all day? No, it means they're likely to, but even down all day can look like this. You know, it doesn't have to be a smooth move, but it does more often than not end up with them continuing lower. Can they fail here at this high volume level and rocket higher? Yes. Would you miss that move if you followed the rules? Yes. And that's okay, because more often than not, you're going to see that chop to the downside. So when you're chasing this one move, you're losing 4 or 5 times, 6 times, 7 times, and then you hit this move and you're like, see, it was there. Well, yeah, but you lost 7 times to get there, so you might have broke even on the whole deal. You might not have, and this move doesn't come that often. Honestly, it has as of late, because the market's been very choppy, but in general, it doesn't come that often. So let's see what we got in the chat here. Interwayflow, welcome, Maxime. Appreciate you being here. Arcturian, I love your analogies. Thank you. I appreciate that. Welcome to the stream. Excited for the book. Looks great. Nice job. Thank you. I really appreciate it. George, hello. Welcome. Will, how you doing? Good to see you, buddy. Everett, live stream the FOMC meeting. Be interesting to see the indicator on that. No, and I wouldn't count on any indicator whatsoever to be accurate on the FOMC. There's too much volatility and too tight of a time frame. So the 5-minute candles on the FOMC can literally move 60 points in either direction in one candle. So you can see a 60-point move up, a 60-point move down in the same candle. I mean, if you haven't seen that, you haven't watched a Fed meeting. They don't always do that. Sometimes they're far, far, far less volatile. But that volatility really throws the indicator off, because it's seeing a lot of volume and it's seeing a lot of levels change. And so there's no consistency in what it's looking at. So it's going to see a high volume move that breaks a key level, and it's going to say buy, and then immediately see that it doesn't work out and it's going to go away, and then it's going to turn into a sell. So it's going to be very confused by the whipsaw of the Fed meeting. So I would not encourage anyone to really trade the Fed until the move is kind of established, or if there is a Very, very strong, strong level that we're talking about. Like let's say we were really close to 7,000 on the SPX, and that 7,000 is this red line. If the Fed snapped up into here, and you wanted to short that area with a stop, kind of above it as it turned, you want to see it react first. You want to see it turn down below 700 or 7,000, and then short, and then you can set your stop back at that high or just above that high. I wouldn't be mad at that because that's a really, really big level that we would expect to reject. But in general, the Fed is just not something you want to trade. It's too whipsaw, and whipsaw in a way that crushes you. You never get out at your stop. So when you get stopped out, you're taking an extra 20% eat at least because the market moves so fast. Any questions before we open? We got about 2 minutes. I got to see what we're doing here. We're going to be likely looking for a buy at the open, hopefully off the pre-market low. That'd be a perfect place for them to buy. But if they break the pre-market low, which kind of is my expectation, they may not do it till the Fed meeting, but I do think we'll see down today because I do think we need to pull back off that 6,900 level before we go higher. There's also some statistics that show that if you don't bottom in the first few days of December, which we didn't, you typically see a bottom around the 15th, the middle of the month, which is next Monday. So the Fed pushing down towards 6,700 would make a lot of sense to me. But we are looking for a buy at the open here, which is important to get ready for. So let me do that while you guys come up with any questions you might have. Nasty and rainy here. No snow, though, so that's good. This is my last week in my uncle's mother-in-law house. If you haven't followed the drama, we left Vegas, traveled for 2 years, came back to Vegas, decided we didn't want to live there anymore. We're going to move to Washington where my wife's family lives. Went up there, decided we didn't want to live there anymore. My dad passed away. We came out here for the funeral. My wife, she's been out here before, but for whatever reason, it really clicked for her that we should live here. So we moved from Vegas to Washington, looked for a house there, didn't get one because we just weren't feeling good about it. Then moved from Washington to Kentucky, so 2 cross-country moves. Did that back in October or so. Got here, got settled in my uncle's mother-in-law house, which is kind of just an apartment with 2 kids, 2 people. It's very small, so we're kind of half in an RV, half in an apartment. Finally found a house. It's an awesome house. We're very excited about it. Closed on it, and then the guys who were staying in the house said, "Can we have 30 extra days because we're buying a house that needs to be remodeled?" So we said yes, and anyway, that 30 days ends Saturday, and we finally get into our house this weekend, and I cannot wait because I'm going to run through a wall if I have to be in 500 square feet for much longer, and with 4 people. If it was just me in here, it would still be small, but it would be fine. But 2 kids, 2 adults, it's a lot. So I'm ready to be in a new house and settled. Um, Ready to be done, to have everything in one place. Right now we have stuff in storage, we have stuff in my RV, we have stuff in this apartment, and you can't ever figure out where the hell anything is. It's a mess. Don't ever do it. Don't ever try to do this. All right, we are open here, guys. We're looking for a buy. Nothing as of yet. They are moving down toward the high volume level, pre-market low here. They spiked it in the overnight, so the 682 level is going to be important for the market. They're going to look for support there, and we're going to look for a buy signal there. If we don't get one, then we don't get one. We do have elevated options pricing, which typically would favor the bears. However, it's Fed day. That's why you have elevated options pricing. So we'll see how it plays out. Like I said, I do expect downside overall, but we'll see how that plays out. I'm sitting on 683 as my strike, just so you guys are aware. For right now, if it moves down, that strike will move down, but 683 would be the level I would take. For this call, should we get it. Morning cats at home, welcome to the stream. Will, you set your day trade stops at 30% loss. How do I do it? I do it 50 cents on the SPY. So if we get a trade here at, say, 682.50 and we have a call, so we want the market to go up. So at 682.50, my stop would be 682. So it's 50 cents of SPY price is what I'm looking for. That gives me enough room for the trade to go without getting crushed. And my risk reward, so what the indicator is looking for first is it's looking for a reversal. It's looking for a top or a bottom to hit. Then the next thing and then the next thing it's looking for is, okay, if we get a top or a bottom, what's the expected move? Where's the next resistance that matters? What does momentum look like? What do all these other factors look like that it piles into the algorithm? And then it gives a probability, and it says, okay, the probability here is X, so we are going to say that we should enter long. When that happens, what it has figured out is that it's expecting a move of 7 to 10 ES points, or about 70 cents to $1 on the SPY. And that plays out very often. We hit that a lot. So that's going to be our first profit area, and usually that's going to be about a 20% gain on our money. So our first profit take is at 20% profit. As we move up, we are coming down into the pre-market low and spiking this high volume level, so I am looking for potential bounce here, but if they don't bounce, it could start to waterfall a little bit here. So we're looking for 7 to 10 ES points, or about it's roughly 70 cents to $1 on the SPY. So we take half of our trade off there and collect 20% profit. Then we set our stops to break even so that if we lose on the second half of the trade, we make 10% on the deal. Those small wins are not what we're really looking for, to be quite honest. But what they do is they counter out the losses. So the small wins that stop out at 10%, you get way more of them than you get losing trades. Those end up being a great, basically, offset to your losing trades. The second half of the trade goes to see if there's runners. If there are runners, okay, we're breaking below the pre-market low here, so could be a short day today, guys. We don't trade trends. And if they start to trend down, like it looks like they're trying to do, then we will want to avoid trading against the trend. And remember, the indicator tries to find reversals. So if it finds a buy signal on a trend day that's down, it's going to fail more often than not. So we are below the pre-market low. Any back test of the moving averages, and so whenever they bounce, all right, I'll go back into the indicator in a second. If they bounce back to any of these three lines and make a new low, then it's a confirmed trend day parameter. That doesn't mean it's going to definitely trend, so we don't just enter short blindly. We just sit on hands for the rest of the day. It's just a day that move on with your life and go do something fun, have a good day, and work out, take a walk, do something else. But it's not a great day to trade. Great day trading is looking for levels to hold and volatility and bounces and things like that. So Back to the indicator. It's looking for 7 to 10 points first. Then it's looking, then we take profit there, and it's looking at potential. So when you get a buy signal from down here, it's saying, hey, we think it can bounce 7 to 10 points here, and we think it has potential to do more. But we do see that the next main level is going to be about 7 to 10 points higher, so we do have a trade for you. And then we see what happens at that first resistance. Sometimes it fails, sometimes it doesn't. We will take the first buy. So I usually take the first trade because a lot of times you can get a failed breakdown and we haven't established the trend yet. So if we get a buy signal, we will take it, FYI. Anyway, we take profit at 20%, and then the market runs in our direction, and that's a really good sign. And we go from there. So let me see what we got going here. Still on 683. They're back testing, and this is going to be a key time for the bears, because if they hold these levels right here, these 3 lines, and hold the open, which is what they're trying to do, this should fall back down. If they can't hold this, then it's a failed breakout, and we're very likely on our way to breakdown, and we're likely on our way to 683.90. So anytime you get a failed breakout, which is a move above the pre-market high that fails, actually this is a failed breakout right here. This is a failed breakout over here. Anyway, anytime you get a failed breakout, I like to use the pre-market high and low because it's easy to teach. If they fail the pre-market high and come back down, you're very likely going to come all the way back down to the bottom of the range, which is the pre-market low. If they fail the pre-market low, they try to break down and come back up above the trend lines here, you're very likely going to go all the way to the top of the range and beyond, or possibly beyond, which is 683.90. So if they can't hold here in this cluster of moving averages and VWAP, we would likely see 683.90 coming. Again, nothing moves in a straight line, guys, so that doesn't mean that we're like, pew! It means that we could be like this, or it could be like this. We've definitely seen both of those things happen. Just know that that price is likely to come sometime at the day, and it may be at the close. You may have to hold it all day or till the Fed or whatever. But that is what you're likely to see should they break above these levels. Right now they have not, so it's still in the bears' court. And if the bears can fail this level, then that will be a feather in their cap. Internals are not so weak. I mean, the ADD's a little less than positive 200, which isn't strong. I mean, it's certainly not negative. And the Vold is really close. It's almost negative on the Vold. So, I mean, they're not weak, but they're certainly not what you would call strong. I would say they're kind of neutral right now. Options are pricey today. Yeah, it's Fed day. You're always going to get extra juice. I can't do a 30 or 50 cent. I do my first stop manually, so that's why that's the way it goes on that. So I don't know the percentage because it's different based on different pricing and how long it takes for the price to move. Sometimes it moves in 2 seconds and it's not that bad. Sometimes it moves in 20 minutes and it sucks. So I can't give you a percentage on that. I can only tell you what the price level is. Evie Gilbert showed a long-term chart of the dollar going up to $1.20. Agree. I don't chart the dollar, so I can't tell you that. If I looked at it, I could probably come up with something, but I really don't do Forex or currency at all. I do the closest thing I do to currency is Bitcoin and the banks. Banks are not currency. I get that. That's a joke. But I do Bitcoin, and that's about it. Currency is just a whole lot of headaches. It is almost all 3-wave patterns. It's really, really annoying. And I just never got interested enough in it to want to go through all those headaches. So I can't give you anything on that. But I will tell you this, Avi's good at what he does. So If he has a chart to $1.20, I'd say that you know sounds reasonable. I think it's Avi, not Avi. I would say a break of this level will likely produce a buy signal. Well, there it goes. Let's see if we get one. All right, we're waiting on the NASDAQ right now. If the NASDAQ gives us a buy signal, we're in. If not, we'll go back down. There it is, 217 here. Our stop is going to be 682.50. And we'll need a decent move here because we do have high options prices.
Order filled.
So let's see how it goes. I don't love the entry only because it came in at this high volume level. You're likely to get a rejection there, which we have so far. We'll see if they can hold it for 50 cents here. The NASDAQ was a little late getting on board. The ES had the buy down here. But that's okay. I mean, that's the way it goes. You want both charts to be in sync. You want them both to be on board with the buy because that means there's more likely broad buying occurring across all indexes, which will give you a much better chance of a win playing out. Now, the good news is when the market does move fast, like it did on the start of that move up, my stop gets a little skewed because I'm doing so many things at once. I can't look at price until I get my trade in, and sometimes by the time I get my trade in, price has moved, 5-10 cents. So we get a better price on our stop, and that's okay. There's nothing wrong with that. But where my entry was and where the stop comes in sometimes are two different places. So the buy signal went away on the last candle, and that's perfectly fine. We take the buy signal as soon as it appears. And the reason is you get a better entry most of the time. And because we get a lot of what we call one-bar winners. Yesterday we had a one-bar winner. Two one-bar winners, actually, where in the same bar, the buy signal comes, it goes up, you get a win, and then it comes back down. Or it goes up, you get a win, and it comes down on the next bar and stops you out. So you get a small win there instead of waiting for it to close and then getting in, and then the next bar would have stopped you out for a loss. So we always take the buy signal as soon as it appears. Now, because they did close above the moving averages, even though just slightly, and now they're pushing to make a new high here, I do expect 683.90. So the trend day has now been nullified until or unless they start to break down again. We can backtest the highs and still break down and create a trend, but for now, the initial trend day has not followed through. So as long as they can get through this high volume level, that's going to open the door to 683.90, which I do think will get hit either way, whether they fail, first and then go, or just go straight there. Doesn't matter. I do think 683.90 is a level that will get tagged. And if they get through 683.90, then 685 becomes extremely likely. Okay, so at 10%, we move our stop up. So we were at 217, so that's 22 cents essentially. So that's 239. So at 239, if they can get there, we will move our stop up 25 cents to 682.75. And that's another big time risk protection thing that we do with the indicator. As price moves up, we move our stop up so that if it does fail and doesn't get to our first price target for profit, we lose less. And that's really important to understand is um, when to move your stops and why. Um, Once we take profit, then we just have a trailing. We have a break even stop, and then once it gets up to a 50 cent gain. So if we have $2 as our stop and price goes to 270, then we want to move our stop up to 220. If it goes to $3, we want to move our stop up to 250. So we always have a 50 cent trailing stop, and that allows us to give it room to kind of give small pullbacks and push and give us maximum gains, but also not give back too much of our profit. You always want to let your runners run. You never want to take quick wins. Let me rephrase that. You aren't looking for just quick wins overall. You're looking for runners, and you want you want to allow the market to be able to do that, to be able to run if it's going to. And so you want to give it some room for these kind of pullbacks right here where it goes up through a key level, kind of pulls back, and then we'll see if it can hold and push back up. It does this quite often because this is stop hunting, right? They're going to pull back. They're going to try to get people who don't know how to place their stops or place them too tight out of the market, use them for liquidity, and push back up. Now, there's good news and bad news about Fed Day. Because all of the volatility is generally stacked on the second half of the day, the options prices don't give away their value too quickly. The bad news is they also don't gain their value too quickly. So you really need a decent move on these high dollar options to get out with a profit. So you just got to be careful on these high volatility days, or the days that are going to have high volatility but have high option prices. So far, we got wicks off this after hours high area, the 683.20. So that purple line going across was the overnight high, and then the pre-market high is actually 683.90. So we'll see if they can get through here without a wick. That shows the bulls are still willing to press and not getting squashed down. Once again, rejecting the after hours high area. They poked a slightly higher high, but you're still getting big wicks here, which is um, if they can't get this candle back up here and close somewhere up around this after hours high, that's going to start to look pretty weak. NASDAQ's not really on board right now with this buy, to be honest with you. So we are likely to come down and make a low here and then try again, I think. I don't know if we'll make a lower low, but let's see here. Not quite. So they held VWAP there. We'll see if they can push one more time. But the NASDAQ's got to get on board right now. It's got back-to-back red candles where ES has green and then slightly red here. So NASDAQ is the fly in the ointment currently. But we do have an improving ADD and improving VOLD, so that's a feather in the hat of the bulls. You want to see those improving when the market is going up. If the market is going up and the ADD is going down, that is a serious red flag. Or vice versa. If the market is going down and the ADD is going up, that's a serious red flag as well. As I mentioned in the open or at the start of the video, Fed Day, usually choppy, usually if it's not going to be a quick trend that develops and runs, which it's tried to do and stopped and reversed, it tends to be choppy. And that's what we're seeing right now is a slow grind, choppy kind of move up that is very wicky in both directions. That's a word, wiki. Look it up. Like Wikipedia. No, like these candle wicks are, especially to the top side, not good for the bulls. That's showing lack of conviction at the level that matters. It shows the bears are winning that level strongly, and usually it will lead to failure. And the Nasdaq is kind of showing that right now. So I do think this trade is probably not long for the course here. All right, there's our stop out. We stopped out. I got what did I get here? 189. Okay, we'll see what happens from here. If they make a new low, certainly not ideal trend day parameters, so we'll kind of see how that plays out. But we have a failure in both directions as of right now. You failed the break down, and now you failed the break out. If they close back below VWAP, that is. If they can continue down and close below VWAP here, you've got a failure in both directions. But usually, more often than not, when you get a failed move through a pre-market low like this, they're going to make a low that's above this low. So whatever this low is, they'll make a low above 681.31 and come back and tag 683.90. If we get another buy signal, we will take it unless they do establish a trend down. Sorry, guys, I've been in the trade here, so let's see what we got here for chat. Make sure I get caught up with you guys. Following the PSKY saga, Paramount. No, I don't. I don't know what that is. I have not seen what that is, George. Are you comfortable showing us your new home? It's so exciting, and good wishes for you and the family. Yeah. Give me a minute, and I can. I will make sure the address and stuff isn't listed. People are weird. Not that I think any of you are weird, but people are weird, so I'm not going to put my address out there. Are you using TOS or different trading platform? I use Think or Swim. Actually, I'm kind of crazy. I use Thinkorswim most of the time, but I am also in a trading challenge through some just it's not like a public thing, but anyway, I'm in a trading challenge which is on a different platform that I'm trading in, and so I'm trading on two different places right now as well as with you guys. So it's that's a lot, but we're getting through it. But generally, I do use Thinkorswim. Yes. So we're not likely to get a buy signal again yet because ES never really wavered. I mean, or SPY never really wavered in the sense that it never really gave you a red candle, whereas NQ did. So when NQ moves back into a buy, SPY's already been in a buy for a while. So they need to move into the buy cycle at basically the same time within a couple of candles of each other. So they have two candles. That's what this setting is right here. So if you go to your settings, it'll say maximum candles between the three tickers, which is the SPY, the ES, and the NQ, is 2. That means they all have to be on a buy or a sell within 2 candles of each other. If they're not, then they're not in sync, and we're not going to be able to take those trades. And that's not something we want to mess with. So we probably will not get a buy signal here should that play out.
Order filled.
Give me 1 second here as I get through the chat. Big moves down on Microsoft today. Yesterday, JPM taking hits with news. I'm gonna try this one. Sashal. I'm gonna try Sashal. Take the news out of there. Just say taking big hits. The news is irrelevant. I have been talking about Microsoft backtesting 500 and failing there for a long time in a big M pattern. I've been talking about Netflix and Facebook long before they broke down. The news is irrelevant. The patterns are already there. I'm telling you, get the news out of your head. Just ignore it. Ignore it. Ignore it. You can't do anything better than that. Financials looking weak. Yeah, let's open up the charts here and see what we got going. So RTY still green, hanging in there, but everything else red in the major indices. Dow and Dow Jones. So the Dow Jones Transports and the banks are actually looking pretty good. Dow Jones Transports, especially, banks are up 0.25%, which is solid. It's not great, but it's solid. So that forecast strength. But tech. So there's two things going on right now, guys. If you aren't familiar with how I view the world, there's the AI bubble, which the whole world knows about. That's if you Google AI bubble, everybody's on that quote unquote bubble. And then there's the banking issue. And the banking issue is much bigger, in my opinion. And I think the banks will be what breaks the market, and AI will be what fuels the break. So banks, when they start to fail, will be what starts the crash, and then AI will be what finishes it. So watch the banks more than AI. Yes, tech. Yes, NVIDIA. Yes, all of that is very important. And should it fail, it can absolutely bring down the market. But I think banks will be first. SMH is flat today, so that's not weak. It's just nothing. NVIDIA's basically flat. They're down 0.5%. That's not great, not terrible. So 185 is huge resistance for NVIDIA. They get above that, they're back on their way to 210, at least 200, and we'll see what happens. Meta's down 1%. We expected that. if you've been in my group, we go over that every day. They back tested a key area and are failing off of that key area. Microsoft, same thing. Netflix, same thing. Uh, Amazon's kind of up near its highs. It's not pulling back enough yet to matter. Tesla's actually in kind of a chop zone right now. They're not doing a whole lot. Apple and Google are up near their highs. Gold's down today. Silver's down today. Bitcoin down today. So it's just kind of a mixed bag because, again, Fed, choppy. You're just getting a whole bunch of noise. So this is an ugly move. You see a huge wick on the top, huge relative to a 5-minute candle. Let's be real about what huge is. Big wick on the top, big wick on the top, big wick on the top, big wick on the bottom, big wick on the bottom, big wick on the bottom. So there's a lot of indecisiveness here, and that's because everybody's waiting on the Fed. Usually Fed day is boring till Jerome speaks. It can be. It's one of two things. It's either an absolute rocket or rip or a dump, or it's chop. But it's hardly ever like a slow grind to a new high of the day. It usually stays in the range, or it establishes a trend very quickly. Do you only teach day trading? No. We do swing trading. We do 401k investing. We do mindset. We do all the stocks for. So the indicator, if we go look at, say, I just did an expose, we'll call it, because that's a cool word, right? Expose. If you say that, people will listen. We just did a 1-year case study, if you will. I don't know what you want to call it. Let me open a different chart because I want to keep this set up to trade. So let's go to here. And then let's go to. Oh, snap. Reload. See, I got so many things running that my computer hates me. Try to shut them all down. Just curious, you guys can see the NQ screen right now, right? Well, not now, but stay with me, guys. If we happen to turn, there we go. Now you guys can see the NQ screen, right? And Junior Wrestler, welcome, or Wessler, sorry, welcome to the stream. If I missed anybody else, welcome to Sasha. Welcome to the stream. Tech not cooperating. Yeah, I saw that. That's why we failed that trade. Welcome to the stream, Sunny. What about the fact that price is above moving averages? I mean, price has always got to be somewhere, right? So I'm not sure what your question is, but reversals start from above and below moving averages. That's they're at, for instance, you can see on the screen here the NQ is above, or it was above the 3-hour 21 for a while, actually all the moving averages, and then it wasn't. So reversals have to start from somewhere. So price being above the moving averages is always bullish until it isn't, which means they're back below a moving average. But you got to look for reversals and stuff somewhere, and there's a bunch of parameters that need to be met for a reversal to happen, and that's why the indicator's so good. Let's see. I hate wiki markets. Yeah. Wiki. That's right. It is weak. Let's see here. And welcome to the stream, Lin Boy. So about 15% down stop loss on that one. Yeah, it wasn't too bad. These days, because the options prices are so stupid, then you get less movement in price, which makes it a little harder to collect, but also you lose a little less. Push that tush. Welcome to the stream. What's the trading challenge? Are you trading futures and options now? I am doing futures, yes. But like I said, it's not a public thing. It's something that me and some other people are doing as a project. So JG saw yesterday's 1 p.m. video. If and when the EEM hits your criteria, will that be the next IRA trade like EK Wax? What percent of count? Thanks. I don't know yet. I can't give you that information yet, Brad. I'm not super confident in that structure like I was gold. Um, when we went into gold in April of 24, it had a very, very, very clean breakout structure. And I was very confident in that structure. And that's why we put our 401k in metals then. If you're new to the stream, guys, we put our 401k in metals in 2024, April of 2024, in a fund called EK Wax. That fund was at $49 when we put it in there. It is currently at $138.36. So if you want your 401k to triple, follow along, get in our rooms. We do good things here. Um, I don't know about EEM yet. I need to see more. And until then, I can't really give you anything on that, Brad. Sorry. Yields up, TLT moving up, dollar dumping. You're going to see a lot of movement in different things today as we approach Fed. Um, just kind of how it goes. Okay, good. You can see the NQ on screen. Thank you. Sorry. What is the dot that does not say dot that does not say SS or AIs? So that's a sell stop. If you have, so there is a setting in there. So there's crossover and cross under. These are not ready yet. They're going to be squeeze alerts, and we're trying to do it so that we have the direction of the squeeze. So the blue would be squeeze up, red would be squeeze down. I haven't been able to code it where I like it yet, or have my, I don't code, I'm not that smart. I have my coder code it where I like it yet. I only want things that are going to be well tested and that I'm confident in. And right now I'm just not confident in it. So I don't want that to be an issue. So I don't, sorry, I don't want it to be an issue for you guys. So I tell you guys to check them off. I should probably just take it out of here for right now. I thought it was going to be okay, but then the more I looked at it, the more I didn't like it. So you can just uncheck those boxes for now. And welcome to the stream, Otis, Will, Everyday Trade, Roth IRA. I want to be rich, tax free. Yeah, that's a good idea. Okay, so I came here, because somebody was asking about day trading, and uh-oh. Let's see if it comes up now. All right, can you guys see it now? Yay, all right. Oh my goodness. Okay. So we're trying to go to Bitcoin. So what we have to do is we're on the weekly chart. We have to set this to Bitcoin. So right now it's set for the ES and the NQ, and we want to change that. So we're going to change it to Bitcoin. We want it all to look at the same chart now. And that's the one that we're on, so we need to be sure we get that one. There's my red flag right there. And we want this to be 1. So on Bitcoin, if we look here from basically last September, I guess even we can come back to, what is this? All the way back here. This is, what's the date? I need this out of here. So from last July, we got a sell in July at about 29,000. They brought it down to about 25,000. So that one wasn't a great trade. But then you got to buy right here at 29,000, and they ran it all the way up to 48,000. So that was a 20,000 rip, almost 100% win straight up, or probably an 80% win straight up. Okay, hold on. Let me see if I can. me see if I can get this, guys. I'm sorry. Super annoying. Okay. 15th time is a charm. Can you guys see it now? You see Bitcoin now? All right. So this sell here back in July of 23. So we went back 2 years. Um, it was okay. I mean, it's 4,000 down on a $20,000, $30,000 asset. So that's about 1/7. It's okay. But this buy right here, we get in at 29,000, right? And it runs it all the way up to 48,000. So like an 80% win there. Gives you a sell and you stop out right here. So you got in at 43,000. You got out at 48,000. So you got -5 here, right? So not a great one. This sell right here, you got in at 65. You got it down to 53. So that was a 12,000. That was a 20% drop on Bitcoin right there. You got some chop here, and these are going to be a few losing trades. So you had an 80% winner, and then you gave some back in these losing trades. That's going to happen, right? That's just part of trading. You get this buy over here, and this buy here gets you in at 63, and they immediately run it up to 108. So that's 45,000 straight up. Again, a sell here where you stop out. This sell you don't stop out though, the second sell. So you get this sell at 94,000. You don't stop out because you don't get your stop signal. And they run it down to 74,000. So what did we get in at? 94,000 down to 74,000. So that's a 20,000 move straight down, or basically a 20% drop that we captured there. Here you got in at 93,000. They immediately ran it up to, you got the sell here, so you got in to 120. So 93 up to 120 is 27,000. That's like a 33% move straight up. Here you got in. Let's just say you didn't get in to get this one. Like, it's a small profit, so you might not have taken any there, even though the weekly 21 always a place to take profit. So you get a small loser here, and then you get a sell right here at 115. They ran it down to 80, so that's 35,000 straight down, another 30% drop. So you're just capturing monster moves with the weekly indicator. Did you lose a little here, here, and here, and here? These three trades? Yeah, you did. Did you lose a little here? Yep, you did. Did you lose a little over here? Yeah, but if you look at the overall win rate, the win rate is high, and then when it wins huge. So you can swing trade with this so effectively, and understand that. Is there going to be times where the market consolidates for months? Yeah, that sucks. That makes the weekly indicator hard to use. Makes any indicator hard to use. But during this months of consolidation from March of 24 to September of 24, so that's 5 months, 6 months, something like that. You got one winner, three losers, and then a monster win coming out of it. So I mean, even if you took this winner down to 66 down to where? Right here, 53. So that was 13,000, right? And this one was going to be 67 down to 58. So that was about 9,000. So you're still plus 4,000 there. And then you take this sell from 58. Let's see, you got out here at 63. So that's another 5. So you're about even on this set of trades, and then you're up 40% on this trade. And you're up, you're up 80% on this trade. You're up, 30% on this trade, 30% on this trade. It's just 30% on this trade. You're just getting such big wins when you get the wins that it crushes any of the losses. So that's the swing trading system and how it works. And that's 2 years of data. It's not like we're looking at one sweet trade that we got. I'm giving you 2 full years of data that you can look at and say, okay, this has been 2 years of the indicator doing what it's supposed to do, and producing incredible results. If you had traded Bitcoin with my indicator the last 2 years, You were up quite a bit of money doing that. All right, we're still choppy here, guys. Nothing. We're not even in a chance to get a sell or a buy. We're just chopping. It's just ugly, and that's Fed day at its finest. So we do have a little time. Let me see if I can post a couple pictures. You guys asked about the house, so let me see if I can get some without the address showing. Frozen? I don't think it's frozen. Will, is it frozen? Are you guys frozen? You should be seeing the spy screen. This is killing me. What is going on with this? Okay, you guys can see it now. If I switch to the NQ, can you guys see the NQ? Just want to make sure you guys are able to see what's going on here because it's going to be historically is January good for the indicator? Yes, very. We had a record month in January of last year. Okay, so you can see the NQ now. All right. All right, just want to make sure. Let's go back to the SPY and let's see here. Let me get this over here. We're almost there. Hmm. I figure out how I want to do this. Would you take a sell if we get one? Yeah, we're just not going to get one. NQ is not has never got through a buy cycle. It's still in a weak selling cycle. I would say right now we're likely on our way on a collision course with sideways terrible trading until 2 o'clock today. Are you able to see the picture there? Okay, that's you can see the pictures. I just want to make sure you could see them. Okay, so this is the bedrooms, just kind of where I was in the pictures. Sorry, master bedroom and stuff. Closet. We'll go through them pretty quick. Sorry, guys. It's not a home network show. That's my wife's office, or will be my wife's office. That'll be my office downstairs. Um, I'll be situated over here. So the basement's going to be kind of the office bar hangout area where this table is and stuff. That'll be couches with a TV on the wall where this computer chair is and where they have their couches and this is the other people's stuff. When they where they have their couches and TVs will be my office area. Neighborhood. Yeah, we're pretty excited about it. Back deck. Backyard's got a garden and stuff in it. It's pretty nice. The people who had it before um, did a nice job with it. This is the main living room and area. Going pretty quick here. Sorry. Kitchen, dining room, sun or breezeway between the garage and the house. Children's bedrooms. Yeah, we're excited about it. Thank you, Will. Are you renovating more? We'll do a little bit, not much. I mean, the people who had it before us literally updated everything. So, um, I kind of wanted something that was turnkey. I didn't really want to mess with construction and stuff. So, for the most part, we won't be doing much. We're gonna kind of do a little bit. We're gonna change their garden around a little bit in the outside and maybe cover the whole deck instead of just having the gazebo thing. Um, and the breezeway, we're gonna build um, kind of a garden, kind of plant kind of thing for what my wife does. She does a lot of meditation and stuff, and she's gonna build that into a space like that. And then the downstairs room will be not the first level room, not the basement. Will be the kids' play area, and we're gonna put jungle gym type stuff in there, so they have basically a entire playroom. It'll have gym mats in it and climbing apparatus and all that kind of stuff. My daughter loves gymnastics and stuff, so she'll have a lot of that stuff in there too. Complete staging. Yeah, that's all. It's not even staged. That was the other people's stuff. It's all still there because they won't get the hell out of the house so we can get in. I'm very ready for that. Then we'll be in. We'll do Christmas, and then that break I take from Christmas to New Year's will be a lot of just getting everything unpacked and organized and set up the way we want. No problem. I don't mind showing it. Nothing else going on right now. So essentially, guys, so you understand if you're new here, how this works, the indicator, is it runs in cycles, right? And those cycles revolve around key levels, buying, selling, a lot of different factors. When you get a sell, you are technically still in a buy cycle. So this buy cycle started, it went up, it started to weaken. And once it got to a point where it was weak, it's still in a buying cycle, but a weak buying cycle, you get a sell signal. And that tells you, hey, this buying cycle is running out of steam. We're expecting a move down, which we got all the way down to here. And then it says, oh, hey, this selling cycle was weakening. So we tried to get a buy signal in here, right? We got one try and it failed. So we never got out of this sell cycle. It never bought enough to, let's say, hey, we're done selling here. And then they turned it back down and we're back into selling again. So we were never able to get a new sell signal because you never got a buy signal that stuck. If you got a buy signal that stuck, then maybe you could have gotten a new sell signal, but not a buy signal stuck, excuse me, a buy signal that performed through a buying cycle. So we're still in a selling cycle right now, and you still have a high, a low, and now a lower high. And if they make a lower low, now we've established a little bit of a trend. Now, because of how things look and how they are, and I think we'll hit 683.90, it is, I think you could see, some of this for today, and then the Fed gives you maybe this, or it might give you obviously, it can give you anything. It's the Fed. And that's why we don't really trade it, because it's just too much volatility. But I do still think 683.90, whether it's at the Fed time or another time, will get hit today. 8 years in, you still have stuff in boxes. Yeah, yeah, yeah. I'm sure I'll be a little bit like that too. Okay, so NQ and ES are out of sync right now. In other words, NQ is in a full sell cycle. ES is still in a weakening buy cycle. So on the ES, we technically got what candle is that? 7:30. So what is that over here? 10:30. This candle here was technically a sell signal on the ES. However, on the NQ, it was not. So when they're not in sync, you don't get the sell signal. So the ES printed a sell right here, and I can show you that. So you know I'm not just fudging. So if we go to the ES, we have to take our pivot point pro, and right now it's still looking for all of these to be in sync. So if we change this to ES instead of NQ, so it's not looking for the NQ to be in sync, you can see they got a sell signal here. So you got the ES actually wasn't bad today. You got a buy signal here, and they ran it up to here. This stop out here was a little annoying, but they ran it up to here, and then you got a sell signal here, and it's following through to the downside. So the ES hasn't been bad. It's the NQ that's screwing us. And now ES has printed this sell signal that would have been a nice winner, but because NQ could never get off the mat and get into a buying cycle, we can't get this sell signal as a trade. Remember, we want all of the markets to be in sync. So NQ was not in sync with ES here. They were more Backstreet Boys. And if they're not in sync, then we aren't going to get this signal. So unfortunately, we missed that trade. But you have to remember that very often the signals that are not in sync turn out to be choppy messes and losers. In this case, did it work out? Probably. I would say it's probably a winner. But we don't take trades when all the markets are not doing the same thing, because you have a lower likelihood of having a successful trade in that situation. But if you look at the overall day on ES, I mean, it was a choppy, ugly move up, but it knew where the move up was, and it definitely nailed the move down on the change there. So We'll go back and reset our indicator so we have it right. And right now, ES is trying to run through a weakening buy cycle to get back into a sell cycle. Then it would sync up with the NASDAQ, which is trying to actually make a new low. So you see when we sync it back up, our sell signal goes away and our buy signal goes away because the NASDAQ couldn't get its shit together today. And here is the deal, guys. So here's trading 101. Let's do a little learning because right now we're just not trading. This is going to be covered heavily in the book. If you missed that at the beginning, I have a book that will be out soon. It'll essentially, I'm saying it's free because I'm not really trying to make a ton of money on it. I am trying to just get it out there. I'm charging $9.99 because of shipping and print cost. And if you're overseas, $19.99 for shipping and print cost. But and then there'll be options to do it online and stuff like that. But the whole point is when you're in a trade, we got stopped out here, right? And then the trade went back up a little higher. That wasn't going to be a winner. It just wasn't enough. But what happens is traders get married and they say, okay, here we go. Big reversal candle and big volume. This is definitely going to be a buy. And it was. We got a buy signal. Didn't go up enough because of the expensive options prices. Then it should have stopped you out. But what happens is traders say, no, it's going back up. And then it does. And then you don't get this wick. You get this kill. And now instead of getting stopped out here for a 27-cent loss, you're stopped out down here for a 50, 80, 90-cent loss, or you're doubling down here or something that is reckless and terrible and going to crush your account. That's the whole point of mindset. It's not mindset like the power of positive thinking. Yeah, positive thinking is amazing. I love it. I'm a big fan of it. But it's not mindset like that. It's not mindset like I need to meditate before I trade and blah, blah, blah. All of that is good stuff. Do that. But it's mindset in the fact that you need to stop worrying about being right and start worrying about managing risk. Because managing risk is how you make money in the market. It's certainly not the only thing that you need to do, but it is the biggest thing that you need to do. Because when you start to double down on trades that are losers, or you start to chase trades that you missed, or you start to get antsy or bored and chase chop, you're going to get crushed. And the market designs itself to do that. Right now, I can tell you right now, this is algorithm trading. This isn't a whole bunch of people hitting buy and sell buttons and finding good levels. This is the algorithm saying, where can I push them to where they think it's going to win? Great, liquidate them. Where can I push them to where they think it's going to drop? Great, liquidate them. Where can I take them on a journey in their mind where they think they're going to be right and I get to take their money? That's all the algorithm does, and it does it ruthlessly because it's a computer program. It doesn't have emotions. It doesn't give a shit about your house payment. It doesn't give a shit about your bankroll. It doesn't give a shit about any of it. It cares about winning trades. And so it's going to do that by manipulating you because you have emotions. Algorithms don't. They don't care. They just trade what they're supposed to trade, and they do it in a very calculated way. Market makers do the same thing. You can see when market makers come in and they do something like this at the beginning of the day, except more severe. Oops, that's not what I wanted to do. They do something like they did. Give me that. Thank you. Where they spike it. They set a precedent that we're moving down. They break the pre-market low. They get everybody on board to short, and then boom, trap them. Right? So all the people who shorted down here are screwed. And they do that off of key levels. So they know if you were, okay, here's how psychology works. Here's how the market maker works. This is a great example. I'm glad we have this on the screen. If you were a person who looked at this chart, okay, and let's do this. I'm going to replay all the way back to the open. Oh, does it take my key levels off when I do that? Hopefully not. No, there they are. Good. Okay, so if I was looking at this, and I think I even said this, um, I'd be looking for a bounce off of this because it's a high volume level, or off of this because it's the pre-market low, right? So this is these are, I should say, the two main areas that we're looking for a bounce. Now, just below that is the weekly low, and weekly lows are super powerful. So what the market maker does is he runs a trap, and he gets you hooked. So we'll hit play. Well, that was fast. I didn't want to go that fast, but it did. So they ran it down to the weekly low, which we just set. Actually, I don't think the weekly low was there. I think we set the weekly low today. Let me double check that, but I'm pretty sure that's right. So he ran it down. He broke the high volume level, and the shorts said, oh, here we go. Wait, the pre-market low. Ran right through the pre-market low. The short said, now we're in. It's game over. We're going down. And then they reversed it really, really strongly to eliminate all of these traders, take all of their money, and squeeze it back up. They just ran a really, really basic trap, the failed breakdown. But if you don't know they're running these traps, and if you don't know that they're doing this, and you don't know where to set your stops, you just get trapped over and over and over again. And it's really, really annoying. And it creates emotion in you. And you're like, oh, I was so close to being right. And then you aren't right. And then you get mad and you're like, no, the setup was there. It wasn't me. It was the market. They screwed me. And then you get to that point where your mind says the market's rigged. It is. I told you at the beginning, the market is rigged. But it's rigged because it trains you through price to act a predictable way. And when you are predictable, when you, the trader, are predictable, the market knows exactly where to put its stops, or where you put your stops, I should say, and it knows how to run those stops. Because if you're trading that way based on the conditioning the market gave you, so is every other retail trader. And when I say every, of course, there are people that aren't. But the point being, if the bulk of traders are trading one way, what's the best way to make money? Trade against the bulk of traders, because the market makers and the algorithms have the money and the power to push through levels that you think are important and liquidate you. So that is why mindset is so important. It's not so much you have to have this cool positive mindset that says everything's going to be good today. I'm going to look at everything with a positive attitude. I'm going to trade this way. You can trade that way and you can do all those things and still be crushed by the market, because your mindset says, this is where we're supposed to break down, so I should get short here. Well, no, the short was actually way back, or down here. The short was actually way back here. You missed the entry. And now, because you think it broke these big levels, it's going to follow through and squeeze to the downside, and it doesn't do that at all. It reverses and trapped you. So that's those are all really important lessons to understand about how the market conditioned you to lose. Can you guys hear me? Can you see the screen? Is everything working? Will says he's having trouble. Okay, good, good. Unfortunately, guys, because ES and NQ can't get into sync, we're not going to get a buy signal here. That's just the way it goes on these types of days. So we'll give them a little bit of time here to see if they can get in sync. The problem is now you have ES is already back into its buy cycle. It slowly got out of it, but now it's back into full buy mode. So it would be looking for a sell, whereas NQ is still in a sell cycle trying to rebound and turn itself into a buy cycle. So while ES would be looking for a place to top, or SPY would be looking for a place to top here and turn down, NQ is looking for a place to bottom and turn up. So they're out of sync, and until they can sync up, we are likely to chop, or they can both move up here. NQ can play catch up, which happens quite often. And I do think we'll hit that 630, whatever level that is, 680, 390, I think it is. Yeah, 680, 390. So I believe, If you rewind the tape, I rewound it in my head, and I'm pretty sure I said this. When they started to fail here, I said they'd make a higher low and likely come back up here. And that looks like what they're trying to do. So here's another great trap for you. Break the lows, reverse it. So now you have a failed breakdown, right? Because we got back above the moving averages. Failed breakdowns tend to hit the pre-market high way more often than not. That's a very, very strong rule. It's one of my favorite rules. However, guess who else knows that rule? Yeah, the market does. So what they do is they come up here and you're like, oh, here we go, 683.90. Now we'll go ahead and stop you out. Then we'll go get 683.90. So you have to understand the psychology of the market and how it's training you to fail. It's a incredibly powerful lesson. It's a nice buyer's bar right there. Not great volume, but really nice. 682.20, a buck, 10-point buyer's bar on the ES. $1.10 on the SPY is pretty good. I have anger issues on trades. My phone has been chucked more than once. You're not the only one, Will. There's been more than 100 times in my life. Not anymore. I've kind of learned to fix all that. But back in my early trading days, when I was a cocky know-it-all that was going to make $1 billion before I was 25, there were lots of days that things got broken or yelled at or pounded, tables, whatever. The market's really good at inducing emotion and then inducing failure. Well, check it out, George. On winning trades, you like to beat your chest like Matthew McConaughey in Wolf of Wall Street. Be careful with that, because the winning trade is the gift the market maker gives you. It's well, think of it this way. When you're a bad trader, and I'm not saying you're a bad trader, Will, or anybody else here is. I've been a bad trader, though. When you're a bad trader, the market will give you wins. And what that is if you know anything about drug dealers, they'll give you your first cocaine for free or your first heroin for free, because then you're screwed. You got to win. You know everything about the market. Now go ahead and give me the rest of your money. Yeah, you won your $500 on that trade. That's cool. Now give me the 10,000. So yeah, the market is very, very much like a drug dealer in that way. You don't do coke, though? Well, that's good. That's good. The market is just another version of it. And if you don't know how to see that, then you will get you will empty out your pockets for the market, because you think that you just keep chasing that first high of winning, and you want that same feeling to come back and that same I know it all, and it never does, and it never will until you change your perception of how to trade the market and what the market's doing. Once you do that, once you fix your mind, the market becomes a simple conversation. Here's what's happening. Here's what's not happening. And this is so, as I've said at least 50 times in my rooms, if you guys aren't in there, you should be in there. A lot of valuable stuff happens in there. When the markets are out of sync, in other words, like they are now, you have ES and NQ doing separate things. Almost always that leads to this choppy chop. And we have Fed Day on top of that, which is probably why we're seeing all of those things. But the biggest The biggest things I can see right now, RTY is green. Dow Jones are very green. Dow Jones transports are very green, and the banks are solidly green. These tend to be forecasters, not a Fed day, but of the market. If the banks and the transports aren't failing, the market is fine. It doesn't mean the market can't go down. It just means that you're probably not going to see a collapse in the market. You may see a small pullback. 6,700 is a reasonable pullback. But for today specifically, when you have fairly strong transport and banks, that is trying to forecast strength in the market. We'll see if that plays out. Again, do not trade Fed day, guys. It's gambling. And unless you're gambling, if you know you're gambling, I go to casinos. I know exactly what I'm doing. Mostly pissing away money, but having a good time doing it. So if you want to gamble and play the Fed day, that's fine. I'm not here to tell you it's going up or down because I'll probably do both. But I am telling you that typically the transports being green and the banks being green, especially as green as they are, is forecasting strength. But again, the market's designed to trap you. So I'm just reading the tea leaves of the pre-Fed decision. All right, guys, I think I've covered all the training I can for today. We've gone over my book. We've gone over my house. We've gone over my poor internet. We've gone over my computer issues. So I think I'm going to wrap up the stream because of computer issues, because it's Fed day, because it's choppy, because we aren't in any danger of getting a trade anytime soon right now. I am going to go ahead and wrap up the stream, and then we will see what the Fed does later. And of course, I'll have updates leading up to that. But for me, I think it's going to be sit on hands for the rest of the day. Options prices are expensive. The market is extremely choppy. The ES and the NQ are out of sync. There are technical issues going on, so not the best trading day. But I do want to remind you the Black Friday deal is out there. You can get the indicator extremely, extremely cheaply, and you also get some great bonuses with it. And it's 30-day money back guarantee. So if you don't have it, I highly encourage you to get it because it's an incredible tool. It's allowed us to profit over $100,000 over the last 2 years on a $100,000 account. So that's a pretty darn incredible return on investment there. So have a great hump day and stay safe from the Fed, guys. Appreciate everybody. And if you learned anything today, even though I know the technical difficulty sucks, subscribe and like for more. All right, thanks everybody. Have a wonderful, wonderful day.